Good morning, everyone. This is Brian Netner with your Wednesday, May 29th morning market commentary. Get right into the numbers. Quite a few things to cover. The biggest issue, of course, planting pace. Let's look at that first here. We see the corn planting pace, once again, the slowest of all time, just like we had last week. The most exciting number here is that not only is the slowest of all time, but we are now the slowest by a full 9%. That obviously got trade very excited here in the overnight market. We're in a category we've obviously never been before, and by a wide margin. So now let's quickly turn over and look at the July corn chart and see just how far this market has rallied. To put things into a bit of perspective, contract highs in July corn are 445, which is not too far away from where we're trading here this morning. And that's from back on this date last year. A little bit odd there that it's exactly this date last year we put in that 445 high. So that's how much we've recovered, an entire year's worth of setback in this market in just 12 trading days here. So obviously anyone looking at this chart here, this July corn chart that we're looking at right now, sees quite a few gaps, straight vertical market. Anyone who's on the buy side, as bullish as the news is, probably sees this chart and is going to be at least a little bit cautious here on the buy side of this market. One other thing, let's talk about the funds here. After short covering in the previous 5-6 years, looking back, when the funds have short covered a position, and we do believe they are now building a long position, they fully covered and now they're going long. How long have they gone in the past? And when we look back over the last 5-6 years, we see that sometimes they cross over to about 90,000 longs, and we've seen them go as far as 300,000 long positions. So it becomes a heck of a guessing game just how much more to expect from the funds. And open interest changes have been nothing short of incredible. Yesterday's open interest change alone was 56,000 contracts, and that's plus 56,000. So on open interest changes daily of that size, you could reach quite an impressive long position from the funds in an incredibly short time. So let's switch over to beans. We are now going to say that these weather maps we're going to look at here are a larger bean story, with acres going over to beans, and now this being the prime time we should be planting beans. Obviously, these maps mean quite a bit more on a daily basis to beans. So starting with the 1 to 5 day, we can say that it is not dry, but if you look out west, it's the first break the west is caught in 4 or 5 weeks of this 1 to 5 day map. So again, we won't call this dry. It's still going to be problematic for planting this week, but at least there's something to be seen on this map that's a little encouraging for the guys out west. Switching over to the 6 to 10 day map, again, light, moderate coverage, better than some of the maps we've seen in the last 4 to 5 weeks. So you just look at this map, you see some areas might be able to make some progress here, and if the rains in other areas are light enough, maybe even the light blue areas on this map could see some progress here if we go out the full 10 days. Now let's look at the July bean chart to put this into perspective with corn. We see this July bean chart, which is scaled exactly the same way we had the corn chart scaled, not showing anywhere near the bounce. So of course, that's a given, seeing as how we're looking for many acres of corn to go over to beans, and we still have a major issue with China. But you look at this chart and you say, well, at least technically, there's a heck of a lot more upside potential than the corn chart that we just looked at. Moving over to wheat here, the good to excellent rating slipped 5% to 61%. Trade only expected a 1% setback, so that is a much larger setback in the good to excellent than expected. Again, with this good to excellent rating, before getting too excited about it going down to 61, we need to keep in mind that the 5-year average is 45%, so we're still miles ahead of that. Also, along with the fund short covering or buying in the case of corn, we see in wheat funds are short covering the wheat as well. a little bit slower, but they are short covering, so that's adding support for that market as well. Moving over to cattle, we have to go right back to the corn conversation. A corn rally is causing feeders to be under pressure, which in turn is also causing fats to be under pressure. We did see yesterday that the national show list was down 8,400. That is that small seasonal pullback we would expect to see here over the next couple weeks going forward. Yet at the same time, all cattle traders need to watch this corn for potential spillover pressure, again, especially on feeders, and if feeders fall enough, then also the fat cattle market. So we'll want to keep an equal eye for this cattle on the corn as we do on any cash trades, and then watch a bunch of markets for the cattle closely here this week. So that's what we have to cover here this morning. If you have any questions, give us a call, 800-551-4626, or visit us on the web, allendale-inc.com.